What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, May 13th. All right, guys, Nvidia stock on Friday finished the day up $11.31 a share. That's plus 1.27% in regular trading hours. It is down here a little bit, a little over a dollar, maybe a buck 60 or so in the after hours, at least from Friday. Listen, guys, if that were to occur on high volume, we'd talk about that a little bit, but take it with a grain of salt. That's an extraordinarily low volume. So listen, we'll do an analysis of the volume profile, pull out as much bias as we can. That's kind of taking a look under the hood. We'll then take a look at the psychological levels that the big money institutions are watching, so we need to be as well. We'll look at implied volatility, the expected move for Monday, and we'll finish out with the directional bias coming out of the chain for Monday. So let's start with that volume profile here on the 5-minute chart. Listen, guys, if you are new here, Nvidia is a daily upload. I cover this thing every single trading day. And listen, my goal here is 10,000 subscribers. I know we can hit it, but not without your help. So I greatly appreciate you subscribing. And I'll keep the Nvidia videos coming every day. So looking here at the 5-minute, we got this pop and drop off the open on a Friday. So let's look at that here. Very normal high volume opening bar. We then fade, and what happens here is we get a little bit of bullish bias on two consecutive out of context higher volume than what is typically expected at that exact time of day volume bars. Okay, that's a little bit of bullish bias. We then fade back again to the red bars. That just confirms what we just discussed. We get a couple of pops on I would argue, even smaller amount of bearish bias compared to the bullish bias, neither of which are extraordinary, but they're certainly there. And then volume gets really contextual, okay, for the rest of the day. Heading into the close, this bar here, whether that was red or green, I tend to ignore that bar. It's a rebalancing bar. It's the first bar after the bell. And look, very little volume. That's because that volume is getting pumped by a lot of buy and sell orders going through, both sides, being triggered by algorithms upon the closing bell. It's rebalancing by institution. So I tend to ignore that one. So what we have here is on a scale of 1 to 10, 10 being the most amount of bias and 1 being the least, I would say we have maybe about a 3 or a 4 here and a 2 or a 3 here. So listen, it's not tremendous, but it's there. So either way, let's move on. Let's take a look at the self-fulfilling prophecy psychological levels, starting here on the very simple 30-minute chart. This exact chart has a lot of eyeballs, with the 50 period, that white line, and the 200 period, that gray line. So let's take a look. You can see here on Friday, we were just barely holding the 200 period heading into the day, and we popped up and claimed the 50 period as well. We actually tested both throughout the day and held them. It wasn't very clean, but we held them heading into the close, into the weekend. So listen, you can see now that both of those are basically right on top of each other. Here's what I'm looking for come Monday. If we see any upside movement, that 50-day is likely to get yanked back above the 200 period. I'm sorry, the 50 period is likely to get yanked back above the 200 period. So bulls, I want to see the 50 period being treated as support. Any test, I don't care what it tests on in terms of volume. I just want to see a higher volume bounce away upside from the 50 period. Bears, this is really simple for you guys. You have the opportunity to break both of these back downside in one small move. Your goal come Monday is to break downside through the 200, through the 50, retest the 50 on lower volume, right? Then the break, and then boom, reject on as much volume as possible. That claims both of those as resistance in one nice motion. Okay, smooth. It's up in the air here on the 30-minute come Monday. Let's move on here to the 4-hour chart and take a look. So you can see here, guys, that we are approximately 1.72%, about 1.7% from that higher level, which is the 50 period here on the 4-hour. That's not a tremendous move for Nvidia. That we can see that on any average day. But listen, let's start with you bears. Okay, this is really similar to the 30. High volume rip through both of those. Just get through, because that's like some muck that you're dealing with. Get through on high volume, ask questions later. Retest, whichever one happens to be lower at the time. It would likely still be the 200 period, since the 50, it's quicker than the 200, but it's still a little bit slower day to day on the 4-hour chart. rip down through high volume, retest low volume, reject on higher volume. Bulls, really simple. Any downside test of the 50 period on the 4-hour chart, we want to see that hold as support, bouncing on as much volume as possible. Let's move on now to the daily, which is by far the most important chart. Especially right now on Nvidia, if we look, it's approximately a 2.5, a little bit less actually, maybe a 2.4% move to retest the 50-day moving average. Guys, that 50-day, of course, we're on the daily chart. The 50-day moving average is probably the most heavily watched indicator on this chart. Perhaps the 200-day, but it's less relevant right now. So in terms of relevance right now, the 50-day moving average is the most heavily watched indicator on Nvidia, aside from like volume, if you even consider that an indicator. Now look, this has been a very important level that we have been relatively indecisive about for the last few weeks. Okay. If we retested bulls, you do not want to give up the 50-day, ideally. It just delays things. Bulls, if we retest the 50, hold it as support. Bears, the absolute best thing you could do here on this chart right now is reject off 900 and rip downside below the 50-day moving average. That would be a huge win for bears come Monday, and bulls would be a little bit discouraging, I would say, in the short term, at least to some bulls. Now, an even bigger story than that, something we've been discussing a lot as of late. Guys, $900 a share is an absolute battleground right now. Okay, and bulls, the best thing we can do come Monday is get back above and hold 9 as support. It won't take much, but just doing that, I would call a win come Monday for bulls. Now, implied volatility, particularly important if you're trading options, is in the mid to high range compared to the last 3 months. Compared to the last 1 month, it's in, I would say, the higher range, okay? If you're experiencing a little bit of IV pump, this would be why in your contracts. If you're looking to purchase new contracts, understand you're taking a little bit of a higher risk of potential IV crush buying with an elevated Vega value from IV being priced into those contracts right now, and you would be paying up for that. Okay. Now, expected move for Monday on Nvidia. We do not have the luxury of daily expirations on Nvidia. Unfortunately, I think it's coming in the next decade, but not yet. So the next expiration we have here is Friday. The expected move by Friday's close compared to this last Friday's close, right? Friday in the future, compared to this last Friday, is plus or minus $41.07 per share. Here's what we can do. We can go ahead and divide that by 5 trading days and then add back 50% to make up for the fact that that original calculation assumes 5 green days or 5 red days in a row. That's kind of ridiculous. So in this market, I'm adding back 50%. That seems to be about right, at least for our best guesswork, which we have to do here because we don't have the luxury of daily expirations. That gives us an expected move by Monday's close compared to Friday's close of $12, plus or minus $12.32 a share. Okay, that's approximately the market's expectation for Monday. Now listen, by design, that has no directional bias, and you might say, well, I disagree with that. That's a good thing, right? Disagreeing with what the market thinks is quite literally why we take positions, right? So that could be a position for you. But you might be asking, well, what about directional bias coming from the market? We can look at volume. 1.75 million contracts traded on Friday. And look at this, 1.09 million were calls, 662,000 were puts. So we're seeing a call side bias on the overall call put ratio here from Friday. And if we go one step further, this video is geared toward Monday alone after all, and break that down by the short-term speculators, the 0 to 20 delta range, 462,000 calls, 334,000 puts, call side bias out of them as well. Listen, if your goal is to try to expedite this trading thing, that's what I originally built our private community for over 3 years ago. Still in there, of course, every single day. And every day to members, I'm sending out my personal scalp setup alerts, my in-play stock alerts. Those are stocks that fit a very specific set of criteria. Those make up the majority of my trading volume. Human verified by me, unusual options activity, and then of course I have my platinum one-on-one group. You guys can take a look at that at the link in the pinned comment. I'll see you inside. And hey, if you're getting value out of these daily NVIDIA uploads, I ask you to do one thing: leave a like on the video, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.